Hello, good afternoon, everyone. Good morning to those who are in the US. Thank you for joining our webinar today. I think you will all agree with me that these last 6 months have been, let's say, unique times and quite difficult. The pandemic has posed several challenges to businesses across different sectors, with some industries suffering more than others. We have been experiencing unprecedented situations. Uncertainty on what will happen next is a sort of situation we are living in. There has been also an overload of information coming all from multiple channels. We have been experiencing government trying to control and protect, but not always have been real, let's say, clear and consistent in their plans, in their procedures, in their communications efforts. But despite all of this, as a businesses, we have been reacting, responding, and showing a lot of resilience. And because of all of this unprecedented situation, we really felt that we needed to provide, sorry, there is a play, a webinar today, like a webinar for our members, where we could try to focus on what we can control, what we can influence as a businesses, especially in relation to the manufacturers in our association. What can we do to enable you and your business to develop a strategy that can be strong in the months to come? And no better person than Mike Marks, who brings more than 30 years of experience in the business advisory arena, could do this better. So I'm very pleased to have Mike with us today. And before leaving the floor to him, like always, I would like to invite all of you to interact and to engage. And I know we live in we all operate in a quite competitive environment, but in this situation, I think collaboration, sharing, coming together is key to find the new solutions to move forward. So, Mike, the floor is yours.
Thank you, Manuela. I'm very happy to be here. Good afternoon, everyone. My name is Mike Marks, and I'm going to be running this webinar. And as Manuela said, we certainly will invite questions and interaction, and we've provided some time at the end. So we've got 90 minutes, and we'll just start. This is a webinar, and part of my role here is to, hang on, I got to get my slides to change here for a second.
I can see your slides, Mike, but I can't see you.
Well, okay, I'll put my camera back on. I was just saving my bandwidth, but there we go. Okay. There we go. So this is a webinar, and my job is not to entertain you. My job is to provide you with information and insight to help you compete in this crazy environment that we're in. So these slides are very dense. There's a lot of words on them, and there's also a number of links for further research. So what I'd like you to do is listen to the stories that I tell you, and download this deck, or you've actually got an email copy of it sitting somewhere, and translate it into native language. And the intent is that you spend time with your own executives discussing some of this, and maybe have some people doing some research in terms of the links that I sent. The purpose is so that you can create a plan going forward. One of the things I would encourage everyone to think about, there are a number of strategic questions in here. And even if you're on a Zoom meeting and everybody's working from home, you can still have these discussions. And the goal is, we're done with reacting. Now we have to get a forward program and make things work. So as I go through this, if you have a question, you can notice the page number in the top right-hand corner. You may want to jot down the page number, and we'll make sure one way or the other that we get all of your questions answered. And hang on, there we go. That's a picture of me. I actually race sports cars. Now that my kids are grown and gone, I can go spend the money. We were doing a project in Asia when COVID hit, so we've been involved with this thing from the very, very beginning. And there's more information you can learn about us on our website. I'll leave that to anybody that's interested. But we have been doing business-to-business advisory services for over 30 years. So here's what we have right now. And I put this picture in here because things are so strange. There's no way in the world before COVID that anybody could make up even a caption or imagine this in terms of running around in a gondola. And there are no best practices now. Normally what happens when companies are growing in a competitive environment, they're looking for what are the leaders and what are the leaders doing? Are there ideas that I can take and adapt? And right now there isn't a set of best practices. We've spent a fair amount of time going back studying what happened during the Spanish flu, and there are some parallels which I will actually share. I think some of them might be interesting, but I'm going to share a number of approaches, and it's your job as a listener to think critically about these ideas and then figure out which ones have value to your firm. Because what's essentially happened, The Economist magazine came out yesterday, and they pointed out that we made 10 years of progress on the utilization of e-commerce in 90 days. When you plot the utilization of e-commerce around the world, it has made a huge leap, obviously. And so what's happened is not that the pandemic, we're going to create a new normal, but there were a lot of forces that were already in play that fundamentally just got accelerated. So the reality we're dealing with now, and I got this from my son, talking to him, he says, "Dad, we're not working from home anymore. We're actually living at work." And one of the things I think that's important for people to understand is that not only is everything harder for those of you that are listening, the pandemic and working from home has made it harder. Your organization is under a great deal of personal stress because people are worried about their loved ones. There's all this uncertainty. A lot of people in organizations wondering if they're even going to have a job and where the world's going to go. So even though you may not see it because people are working from home, every organization is under pressure right now, and none of you have any discretionary energy left in your firm. In other words, if I give you some new things to go do, which I will, you have to stop doing something else because everybody's running at 100%. And the key thing that's in front of the leaders is that employees are waiting for some leadership. They want to know, is the company I'm working with, are we going to make it? Are we playing? This is an important phrase, and I've shared this a lot with a number of distributors in Europe. You have to decide if you're playing the game to win or you're playing the game not to lose. And there's a big difference. It's okay to do either one, but just don't confuse yourself. And the idea, if you're playing the game to win, you must come back to your employees and give them the confidence that our company, we understand that things are crazy, but our company's got forward momentum. We're going to win. I feel very glad that I'm part of this organization. And so that's the responsibility that's on the executives right now. And we've had enough of the shock. Yes, ma'am?
Yes, I think this is a really, really good comment. And everyone should think about that. Are we here to win or not to lose? And definitely is already one of the highlights of the first 10 minutes of your presentation. Yeah. I don't know if anyone wants to comment how they feel about that with the chat box. Feel free. How do you see this statement?
Well, it's there's another saying in the service, in the military, that says you don't have to like it, you just have to do it. We don't really have another alternative at this point. So here's a perspective, and I'm addressing this next comment to the senior leaders that are listening. And what's essentially happening now, and the big idea of this webinar, is that companies do business planning. And when you take a large step back and you say, why do they plan? What we do is we have resources, we have people, we have capital equipment, we have things, and we align those resources with opportunities and threats in the market. So we go through an annual planning process and we say, where do we want to invest? Where do we want to divest or pull resources back? And we go through that process every year. Now, the problem is that when the market changes faster than your planning cycle, by definition, your planning resource allocation is wrong. In normal conditions, the annual planning process is what we all learn in business school, and it's worked under normal circumstances. But when you're in a disruption, what happens, the decisions that you made in the fourth quarter of 2019 for where you thought you could grow, the world is very different today. And here's the key point. If your resources are still set up the way they were when you designed your business plan for 2020, by definition, they're not aligned properly for what it is what you need to do now. The question is, what should you be doing? So all those little tiny words on the left is I spend probably 2 hours a day researching what's going on, what is the new normal, what are the economic things, and we do this because as consultants we have to give advice to clients. I'm going to share this advice with you. I also point out to our clients and to you that a lot of times we may be wrong because we have just as much uncertainty as everybody else, and our views change as we get more information. There's a key point here. The key point is that we give advice from an informed opinion, and to get forward motion in your company, the senior leader has to have a forward plan where the senior leader is saying, I understand the uncertainty, but I know that these things are true. These are the changes that we're making so that we can grow and prosper in this new normal. And I'm asking you as a member of this team to join me in this journey. So they need to see that leadership, and instead of just thinking we're pulling our head in like a turtle and we're waiting for the world to go back to January, those people are delusional. It's just never going to happen. And this whole idea is about, and we're going to take things that as manufacturers, I don't talk to distributors about this, but as manufacturers, most of you have internal to your company, you have expertise in lean, you have expertise in agile, and what we're basically going to do is we're going to take some of those proven techniques and apply them at the enterprise level so that you can make a short-term strategy pivot. This is really powerful. And I want to share 2 ideas that will really sort of guide this. We're going to talk about the money and economics for a second. And again, this goes back to thinking, how are your resources aligned to the true opportunities in the marketplace? The first thing I'd like to draw your attention to is the curve on the right-hand side. And this basically shows the economic growth over 100 years of various groups of economies. And the red line there is Western Europe. The sort of turquoise line is Western Asia, and the purple is Eastern Europe. But if you look at the history, notice the strong growth in GDP per capita. And the thing I'd like to point out, if you notice those little red arrows, during World War I, we also, and right after World War I, we experienced the Spanish flu that killed 50 million people over basically a 4-year period, if you count it all out. In World War II, imagine, in the business of I'm in the paper towel business for companies, and I sell paper towels. Imagine in an occupied Europe or in a Europe that's being bombed in World War II, the people that own these businesses were out there, they were still doing business. And if you kind of look through every one of these little, even the Great Recession up there in the top right-hand side, see it was a dip. The point I want to make about this is that the COVID crisis is a personal tragedy for many, many people. And we're all learning a lot as Western societies. But if you look at the trend, it's a blip. From a long-term economic point of view, Europe's going to come back just fine. Europe is actually, it actually appears now that Europe's in a position, I think, that you're going to end up a whole lot stronger coming out of this because of the things that are needed for stimulus. That's a personal opinion. But the structural growth that you've got is not going to be challenged. Yes, it's going to be hard. And one of the problems that we have in Western societies is that we have been so comfortable for so long since World War II that we've lost our ability as a society to deal with adversity. And so this seems like it's just the end of the world, but look at the history, and history continues to repeat itself. So we're going to be here. This will pass. There'll be COVID 42 for our grandchildren. There's always going to be something. So set that aside. Here's the important part. Where's the money? You got to go where the money is. And what I'd like to do, notice that pie chart on the bottom left corner of this slide. And if you're looking at sources of growth, there's a lot of information behind this that we're skipping, but here's the punchline. If you look at your growth on an annual basis, on that lower left-hand pie chart, most of the growth is given by the economy. In other words, a rising tide raises all ships. So if the economy is going to grow at 4%, our race is that we want to grow faster than the economy, meaning we're gaining share. But most of the growth, whatever the growth is, the percentage of growth you're going to get is driven economically. That little red slice at the bottom had to do with inflation, which we haven't seen in a long time, but those would be price increases, which would generate growth as well. And then that green slice is share shift, where you're actually gaining share from a competitor. A competitor goes out of business. Now, those size of those slices may change from time to time, but fundamentally, what you've got is a predictable pattern. Now go to the top, and this is very different. And this followed, if you go back, for those of you that were leaders during the Great Recession, 2009 and 10, when you go back and look at the data, it looks much closer to the pie chart on the top. Most of the growth that you're going to get over the next 2 to 3 years is from share shifts. You're going to have competitors that go out of business. You're going to have competitors that get weak that you may choose to acquire. You're going to have all kinds of disruption. The supply chains that existed when a customer of a distributor says, I'm happy with my current supplier, and the distributor says, I'm happy with my current supplier, all of those relationships are challenged and they're loosened as a result of all this disruption. We'll talk about supply chain issues in a second. So fundamentally, the economy is going to give you a little bit of growth. There won't be any price increases, and unless there's severe shortages of mass, as an example. But if you really want to think about your growth, are you positioned with your sales force, product development, and the rest of it to take advantage of all of the share shift? And that, to me, is the big opportunity and why people need to change their resources. So what we're basically going to look at here, this is data from McKinsey, and this is a sales pitch to everybody that's listening. I'd like you to download the deck. I'd like you to click on this link at the bottom, which is the McKinsey. This was the June COVID briefing when we put it together. There's now a July. If you go to this link, it'll say, here's the July version. And they update this. It's like 50 slides. And it really breaks down a consensus from the McKinsey global surveys and the other things in terms of where things are going. And I'd like to make 2 points. And they put together a number of scenarios, 9 different scenarios, and they're talking about probability. And so this chart on the right basically says, when is the economy going to come back? Everybody thought it was going to be a V, very sharp V comes in. And what's basically happened now is the other side of the V keeps kind of extending out. The Economist magazine back in May felt that we would end up at 90% of where we were in 2019 by the end of the year. And if you notice, this extends out a lot further. If you look at the dark blue line, which is the Eurozone, it showed the economic hit, and it's now projecting that we'll be back to our normal 2000, we'll be back to where we were at the end of 2019 in the third quarter 2023. So this is not, plan on this being a marathon, not a sprint. And in that military line, you don't have to like it, you just have to do it. You want to design the company so that we can prosper through this process, and there's different strategies, which is the meat of this. But this is just stating and believing that we're going to be back to normal by the end of the year. We'll be used to it, but it won't be back to normal. Is just an unrealistic expectation. Now, I want to challenge that number where they talked about the third quarter of 2023, because that's, my sense is that's probably pretty close to right, but it's going to be very different for everybody else, because if you look at the bell curves on the left, what happens if you look at the red curve, and this is about the recovery, is the recovery going to be slow or fast? The red curve and the blue curve both have the peak at the same period. But here's what's happening. When people look at economic data, they think everything's going to be the blue curve. Oh, it'll be back, everything's going to be fine. What's going to happen, there are people that are actually doing very well now because of the business that they're in, and there are people that are basically dying. We have floral distributors that have had to get rid of 80% of their employees just to stay alive because the supply chain basically was destroyed. If you have a facility supply distributor that you support, and they live on hospitality, and they're in Southern Europe, it's going to be years before that comes back, because one of the things we learned in the Spanish flu is that once the actual epidemic was over, there was 3 years of fear before the fear went away and people actually got back to normal. Now, there's good news for this industry in that. If you're in the hospitality business and serving that market, it means, yeah, things are going to be tough for a long time. But But the other side, if you're in the personal protection business, things go really well for you. If you're serving a lot of contract cleaners, they're going to be very busy. It depends on the section. Anything to do with travel, group events, dining events, those markets are going to be very challenged. So you're going to see very confusing information where the news is going to say, this is what's happening, but you know people that life is horrible, and you know people that things are really well. So there's a process to understand how this plays out, and it's basically an analysis where you look at your customers, but we're going to be on that red curve where people are going to be coming back. It's going to be very inconsistent. And the 3-year boost in market size, this is really powerful for the industry. And I don't have time to actually explain how we got there, but it's basically called news content analysis. But there was a concern with cleaning and what is clean and what is safe. They associated clean with safe in the Spanish flu. And for that 3-year period of fear, think anybody that's in the business of cleaning and maintaining facilities, there's going to be, we believe, a spike in revenue in terms of the size of the total available market that will certainly last for a while. It may never go back to where it was before. So the key punchline. Yes, ma'am?
This is Manu. Yes. So do you think that, for example, the crisis the commercial real estate might go through will be compensated by like enhanced cleaning demands? And so that for cleaning contractors, actually, they will gain despite there might be a recession?
Absolutely. And it's the combination. This is the part that makes it really interesting. When you kind of look at it from an association point of view, if I look at it from ISSA's perspective, everybody's going to have some parts of their business that will be very challenged, and other parts they're going to have issues trying to find the right number of suppliers and things like that because they're going to have product shortages. And everybody's in a different situation. So this is something that you'd normally turn over to a financial planning and analysis group in your finance department as a manufacturer and say, take a look at the markets that our distributors are serving and other people are serving and figure out what our combination is. There's an analytical process to go through and do that, but there's 2 degrees of freedom, so it makes it a little harder. I know I'm getting too much in the weeds, but your observation is right on, because there are going to be people that theoretically are competitors, 2 manufacturers that are competitors. We're both in the chemical business, and because of the markets they serve, one's going to do better than the other. It's not about the performance of the sales team, it's the flow business that they've actually built. So there's some art to this, and for some people it's good news, and for some people it's bad news. And so here's where, what do we do with this? And there's a bunch of information, and this is that we have a bunch of links here in the back that if you're worried about cash flow or the balance sheets that are challenged, stress testing is a very powerful tool. And if you look at operating in a disruption, stress testing is almost a better tool to manage your business than your annual planning, because stress testing automatically adjusts almost on a weekly or even daily basis if you need it to. So here's a couple questions. You're a senior leader in a manufacturer. Your board is wondering, what is our revenue expectation for the end of the year? They're expecting you as a leadership team to give them the answer. You know how hard that is. And the question I pose to you, if you're asking your distributors, if you're asking your salespeople what they're going to do, they have just as much trouble as you do. We're guessing. Nobody really knows. And we don't like uncertainty. We understand bubbles and strong economies. We understand recessions. You know, we're right now, we've got bits of both going on. And the real issue is like saying it's a salad dressing and an industrial lubricant, 2 terms that don't make any sense. And we're all trying to figure out how to deal with this. But your sales rep has very limited ability to get a customer to buy more now, because the customer is going through the disruption. The salesperson doesn't have a lot of extra energy. And so here's the key idea. Everybody on this call has what we would call flow revenue. You could go Google the term getting into flow. And these are people that you're not selling the product, they're buying it. They're buying the same product every month in terms of usage. And if you just actually stopped and all your salespeople went away, your volume would not drop to 0. Over time, it certainly would. But in the short run, this flow business is business that your customers, your downstream partners in the value chain, you're going to have that business whether you invest energy in it or not. And so the key thing to think about, this is a strategic question. If I back off on some of my existing sales activities and have my salespeople do something different, am I still going to be able to get this flow business? And the answer is yes. And salespeople like to sell. And basically, is it make sense to have your salespeople chasing transactions and trying to get orders with everybody else that's in this pandemic? Or is there something better that they could be doing that would improve your company? A lot of people can back off on plans, and I'll show you a method to do it. And the plan itself isn't worth anything, but planning, actually thinking about, and this is the key thing I want everybody to remember, the planning process that allocates your resources to opportunities is the critical piece of this whole thing. And when the market changes, you want to readjust your resource deployment to match those market opportunities. Remember all the share shift that we're going to be dealing with? So things look very, very different. You can leave the numbers there. The finance people can track cash and let you know if things are getting better or worse, but that's basically where we go. So here's the hard thing, and a lot of people are probably just going to hang up now because they're going to hate this idea, but you spend a lot of time talking about plan variances. The way you do planning, I've got two numbers out here. Number 1, planning now, and number 5, planning going forward. I'm going to paint a choice, and everybody can make a choice. If you decide not to decide, you're staying at level 1. But typically, everybody in this call, several months before year end, you start to have discussions with all your various departments on product development, on production planning, and selling plans and promos, and you put all that together, looking at the market and saying, what is the best deployment of our resources? But it's a complex process because of what's in the green here, because the reason you have to do all this in detail is you're putting together budgets, you're allocating resources so that you can build all these plans. So in the following year, you can measure plan, actual, and variance. It is your key number 1 control tool. And we've been using it so long under such standard conditions that everybody can't imagine not doing that going forward. But you can, because the fundamental issue going forward, here's what happens. The senior executives have a meeting. We notice we're missing a sales plan on this particular product area. So the senior executives go out and talk to the next people down and say, you know, you're missing this. The manager says, yes, I know, we're working on it. This is what we're doing. The senior executive takes that message and goes back and forth. You spend a lot of time checking on things that don't really add much value. This is where we're going to be talking about lean. So what you basically say in terms of planning going forward is you stop caring about the variances in your plan that you put together at the end of 2019. Think back to the Great Recession. If you go back and look at continuity in history, 2009 and 10 were just ugly, and everybody knows it and they expect it. 2020 is going to be ugly as well. So you basically say, I'm not going to spend a whole lot of time talking about that because I want to pull back these resources from planning. And what I want to do, this is the interesting part. All this thing with the numbers and trying to track things to guess and come up with a magic number, most of those are wasted activities now. What is a critical activity and gets lost in the shuffle is the discussion that you have about, are we investing our resources properly? Do we need to increase our sales force? Do we need to decrease our sales force? Is it time to rationalize our product offering? All these questions need to be adjusted, and the loop, the plan, do, act, measure loop that you have to go through needs to happen on a much faster cycle. So what I'm suggesting is stop paying attention to trying to manage all of these variances because you're not going to get there anyway, and instead spend that same amount of time, pull it back and say, let's fine tune our resources because speed is a weapon. Being able to react to this is really, really important. So you may decide, I leave my 2020 plan in place. We look at the numbers, everybody knows the numbers. Let's make the assumption everybody's trying to do the best that they can right now. And so we don't need to go tell them that they're missing numbers. That's a wasted activity. It kind of goes to the line, don't ever try to teach a pig to sing because it wastes your time and it annoys the pig. So here's a new game and you can choose part of it. And the biggest obstacle of this is executive unwillingness to change or be bold. The game we were playing of chasing orders and trying to get customers and trying to get the right channel partners, it all broke in the pandemic. All of your competitors are in the same situation. Most of them are just going to cut costs and wait for the world to come back to normal. And most of you have very similar business models. So here's the new game. Between now and the recovery, and let's assume that it happens sometime in 2021, stop chasing a specific revenue number. It's false precision. And just focus on gaining share and increasing shareholder value. And this is very different than trying to chase revenue right now. Before the pandemic, chasing revenue with good management controls was the best way to gain share and increase shareholder value. Chasing a number right now isn't, because what you're really trying to do is I want to position myself. Think about this. Everybody's in chaos right now. You start to position yourself so that I have maximum competitive advantage when the market turns. So when we have that wind at our back of the economy, remember that first pie chart I showed you? When the economy comes back, I'm going to be able to grow much faster than my competitors. So I could actually be gaining share if my sales are down 5 or 10%. If everybody else is down 15%, I'm gaining share. So if you start thinking about this, I'm going to show you some options and some new things. But if you really want to play this game, step one is you have to adjust what you're doing right now. If nothing else, just evaluate. You may go back and say a lot of it's just still the same, but you need to start and assume a zero baseline and say, what do I need to do about my resources? The second thing, and this is the hard part, you need to create a nerve center. And McKinsey and their insights talked about how to set up a nerve center for a manufacturer and the 5 teams and how it works. It's all in the resources that are in this deck that you can research and find out. And by the way, a lot of the McKinsey material, you can actually click in the language and it will come out in French and Italian and German and the rest of it. So you want to reset what you're doing with the resources. You need to set up a nerve center, and the nerve center, all they do is make sure that you sense changes in the market and you react very quickly. The third thing, and we'll talk about this later, is if you want to get the confidence of your team, you need to do something bold, not reckless, not betting the company, but stand up to be noticed and say, this is what we're doing and we're doing it with intention, and do something that's bold enough that engages people's minds and hearts and gets them excited. So if you think about playing this game, here's how you do the lean process. And what I would suggest is take the senior exec. First thing you do is go find who in your organization would be your designated subject matter expert on lean and agile. And what you're basically going to do is, if you're very involved in Six Sigma, which takes variation out of process, you're not going to abandon it, but all the measurement to keep it solid, you're going to back off a little because it doesn't add any shareholder value. You're going to increase the use of lean and agile processes because speed is a weapon. And we're going to apply this to the enterprise level. So what you basically do is you say, what processes aren't critical for, say, the next 6 months? And you either put them on hold or you lean them out. And this has to do with accounting, this has to do with production, this has to do with product development, has to do with marketing, with sales, everybody. And you're basically saying, I have some wonderful opportunities to grow share or grow my shareholder value, but I don't have any resources. Remember, everybody's really, really tired and they're worn out and things are tough. So what we're going to do is we're going to find some things to take off the table so we can reinvest that organizational energy. And one thing that's a very practical tool to get this going, you take every function in your company and you say, look, what can we stop doing? And then what is the one thing, if you could invest resources, that would move the needle, that would improve your performance, whether it's productivity, revenue, cost management? Have every function in the company come up with the one thing, and there's a link here to help figure it out. I want you as a department head to come up with a program, a project that you can truly resource by leaning things out so that it can be delivered in December. So everybody all of a sudden, instead of worrying about this and talking about what are we going to do, we're giving people something that's going forward and we can move ahead with it. It's a really critical piece so that everybody has some work to move ahead and get this thing going.
Mike,
so, yes?
Do you have, might be a tricky question, but do you have maybe an anonymous, like a sort of example of a company you have been working with that actually is currently implementing this philosophy?
Absolutely. I have, I cannot tell you who, obviously.
Of course.
But what they've done is they did a significant reduction in force. They were very aggressive in terms of setting up contactless activities throughout all of their operation inside. In terms of, they had cell manufacturing, so it was much easier with cell manufacturing to separate everybody. They've also gone through and made major changes in their sales organization and beefed up marketing. And frankly, they're involved in already looking at acquisitions, where they're in the middle of talking about one now, which is we can talk about in the Q&A. It's much harder. You cannot pay the multiples that we did back in 2019 for a company, but to the listeners on this call, they all need to be thinking about acquisitions, which I'll get to in just a second. But here's the part, Manuela, that's interesting. The folks that are really playing this to win are still telling all of their peers and competitors, yep, things are tough, we're doing the best we can, and they don't want to share, because there's major competitive advantage. If the market shrinks, let's just say for the sake of discussion, the market shrinks 10%, I can still be growing because it's a zero-sum game. It means it's coming out of these other people that are failing. We just had it. We had some good news for distributors. This was in the States. A sizable distributor filed bankruptcy because they had too much debt and they went broke. The good news for the other distributors is that all those customers they were serving now need to find other suppliers. So the strong distributors kind of like they jumped on that. So there's going to be growth even though there's disruption, but it goes back to that different pie chart. But Manuela, that people are very secretive about that when they want to go. Do
you think these companies, okay, some of them actually were sort of lucky because they benefit from the competitors going bust, but the one that are succeeding in implementing these strategies, do they have any specific trait that is allowing them to be successful now? Like,
I would say that if I was really going to boil it down, and we work, as you know, we work with multiple industries, so this is wider than just facility supplies and cleaning. But it's those people that are actually bold. Instead of being stuck and looking around for everybody else, they're saying, all right, let's assume it's going to stay this way for a while. How do we win? And they broke rules early. They broke convention early. They did their stress testing early. They right-sized their organizations early. They moved sooner. And so I'm going to say what really ties them together, they recognize that speed is a weapon. And those people back in March that made all of those moves, what's happening now, when you get out here in July, you're seeing the impact on them. The gap between them and their competitors is getting larger and larger. We do a weekly pandemic revenue index in North America where we have distributors sharing data. What are your sales this week compared to the same week last year? And it's typically running single digits, low double digits compared to 2019 when we look at the group. But within that group, this is the part that's interesting. That's why what you asked was a very good question. Even though the index shows that the market is down, I think the last time we were down 8% from last year as of last week, that was on the weekly basis, there are still companies in there that grew 12% up from the same week last year. So it starts to show up, but it's about speed and it's about acting early and instead of just waiting to get everything all sorted out. So that's the straightest answer I can give you.
Thank you.
And so let's just back up for a second, and let's say that you go through a lean process and you find some things to stop doing or to cut back on, so you have some extra resource. And remember, the game I'm talking about here is you want to maximize your competitive position at the beginning of the economic recovery. And there are going to be many opportunities in the next 2 years, but these aren't going to be the kinds of things you could really deal with in an annual planning process. All of a sudden a competitor shows up weak or a bank goes into forbearance with them. I mean, there's many things that happen in the next 24 months. So I listed a number of activities on the right-hand side that people can review later And there's one I really want to mark out, and this is something that we found in Italy, and actually I've found everywhere we've looked where people have reached out. To the senior executives of the companies that are listening, the CEOs and the managing directors, please reach out to local elected government officials and invite them into your business saying, I know you're trying to figure out what to do with the economic recovery and trying to guide things. Would you like to come and see how we have dealt with the pandemic and the actions that we've taken? And the elected officials are desperate. They're desperate to get insight from businesses in terms of what's going on. And this may not be a normal activity for most people, but you can have more influence than you can imagine by bringing them in and letting them understand up a little bit closer. So do you have time to do it? If we're all sitting here and we're all busy 100% or 120% of the time, the answer is no. But as you lean it out, all of a sudden, there's some really interesting opportunities to rationalize SKU offerings in terms of rationalizing your product line and the rest of it. And so my point is, it's not that any of these specific activities are the right answer, but don't just assume what we're doing now we have to keep doing. Just take a step back. Is this going to help me grow share in the short run or improve my competitive position for the recovery? And if it's not, if there's a better use, change what you're doing. That's what executives do. What I just described, if you think about it, if you let go of all the financial budgeting, that's what the planning process is truly about. And that's what people are trying to do. So I want to talk about some specific things here since we're rolling through. Your sales force, let's talk about the sales force and product development in manufacturing. Your sales force is got to have relationships with some large customers. Even if you sell everything through distribution, your salespeople have to spend time with customers without a distributor around. One of the most important questions large end users ask when they have an opportunity to talk to a factory rep is they say, which distributor should I be buying from? And that is it's informal, but it's very powerful. But what I would suggest is that to the extent if they're selling direct or even just talking about calls, I listed 4 questions for their direct activities. And are there major customers that we've never been able to get because they were, quote, happy with their current supplier? And because of the pandemic problems, maybe there's an opportunity now. You want them to think, and this is a serious conversation that you're asking in terms of their direct activities, what's the right thing to be doing? Now, that's only a part. The big change for most of your salespeople, since most of you are using distribution as a channel to market, is what do they do with their channel partners? And this is the problem. Your salespeople, if you sell through distribution, are also salespeople. They also must be a channel manager. And I've listed 4 things here that you need to spend time with your sales force so they understand these 4 things. And I want to talk about this little table at the bottom. We did a research project several years ago. The link is down here at the bottom. But if you were going to look at all your distributors and break your distributors up into winners, potentials, and losers, I apologize for the term, but if you look at the growth rate, the winners are your top 25% and the losers are the bottom 25. In the help they need from you, the losers need a lot of help. They do a lot of price whining. The winners, pretty much, they're well managed. If they need help, they ask. But here's what happens with your salespeople dealing with distributors. Their time investment, they spend a lot of time with losers because they demand a lot of help and it's the squeaky wheel. When your salespeople get tired, they'll go talk to a winner because it's good to be with somebody that likes you. And the potentials are easy to ignore. So in terms of your ability to influence growth with the distributor, there's no hope with the loser. Your ability to influence growth with the winner is low because they're self-managed and they're effectively managed. The opportunity to grow through a distributor is by taking a potential and turning them into a winner. So if you notice that yellow bar at the bottom, that is the typical time investment of your salespeople, and that number on the other side of the slice is their ideal. So if you look at typical, 25% of their time's with winners, 10% is with potentials, and 65% is with losers. And I'm suggesting you change who they're spending time with. So this very first direction, because you got to understand, some distributors aren't going to be here at the end. And there's going to be issues. They're going to be asking, right before a company goes bankrupt, they always ask for extended terms, and then they file bankruptcies. So you want the salespeople to be spending time where they can move the needle. You want them to work with the winner and the potential distributors. You also need to be very clear with your salespeople that they're going to have to be delivering some bad news, right? And they're also going to have to be coming back to you saying, this distributors, I'm starting to worry if they're going to make it or not. They need to bring those to you early so you're not extending terms and you can protect your receivables. The most important part of this in this planning process, and you can do all of this in a week, is you're just asking your salespeople, I want to have a discussion with you and you tell me in your geographical territory, who are the ideal partners? I know who we have now. Who do you want to change out? What do you want to do? They should at least have a picture of what they want this thing to look like, because things are very mobile and you can get it done. This is not urgent, but it's important. So let's talk about product positioning. I've already seen some really stupid things happening. And the one comment before I start, most people in this industry, and this is a personal observation, it's very possible it's wrong for your company, so I'm generalizing. But this industry tends to over-resource sales and under-resource marketing. And when I say real marketing, the large companies, that's not an issue. But if you're not a major, large global company, it's typically we spend more on sales. But I know you spend enough on real marketing when your marketing executive is the largest voice in product development. They're the expert on competitive positioning and knowing where you are. And you're also managing your brand, and there's key performance indicators in every management meeting on brand management. So that's part of how you tell. Number one, do not introduce discounts to encourage buy now behavior. It just pulls sales forward, and we're going to have a bunch of supply chain shocks here for the next 18 months. And all it's going to do is make it worse. You're not going to sell more. You're just changing when it happens and thinking you can keep pulling it forward. That's like paying your master charge with your Visa. Also, don't do any line extensions right now. A line extension says the product already exists in the market by one of your competitors, and you're coming out with the me too. Even if you think it's wonderful and better, because everybody does, we drink our own bathwater, do not bring out a line extension unless you have a significant advantage in the product availability or cost. If it's not blindingly clear, don't even do it. But the product development, the new introductions, anything that you've got that can help in the new normal. And by the way, one of the things a manufacturer can do, even if you're in the consumables business, you might be wanting to lease or rent the LED Class C UV cleaners, which are dangerous. It can kill people, but it's how you disinfect buildings and go inside. There's a lot of things that are going on here. And if you go back and look at this, social media, because so many people are working from home, if you're going to launch a new product, this marketing and all this becomes very important. The other thing I'd like you to grab a hold of is that there is going to be a new normal and everything's going to be virtual. What are you going to do if 50% of your customers say, I don't want to see a salesperson again? How do you do a virtual trade show? I would suggest that you take your senior marketing person and say, we want you to become the subject matter expert on everything virtual and digital and help us get there as quickly as we possibly can. And by the way, I skipped, I'm going to back up just for a second. I want to talk about the GBAC Gold Star program. When Manuela asked me about one of the questions here, one of the people that is one of the early recipients, manufacturer, in terms of earning the GBAC Gold Star, and that is something that you own as a member of ISSA. The Global Biorisk Advisory Council is part of your organization, world leaders in this, and they've come up with a standard that allows a business to put a gold star in the door, which tells employees or customers that that facility is safe. In the States, our football, and our football is different than yours, it has pointy ends. But what we've done is several of the large stadiums are aggressively getting GBAC certified so that they can return this very, very quickly. Why am I bringing this up now? And I'll move back to where I was. The key thing here is that it allows you to start talking to customers and your own team about we're going forward. We're not talking about what we're doing now or how terrible all this is. It gives you an opportunity from a marketing point of view to really be talking about we're going forward, this is the new normal, we're going to lead, and we can go move it forward. This is something else that people don't understand, and they've really hurt themselves. And one of the famous Austrian economists said that anytime economies become more efficient, they become more brittle. If we lost the internet, this webinar wouldn't be happening right now. If we're a subsistence fisherman in Bangladesh and the internet went out, we wouldn't even notice. What we've done with our supply chains, we've made them, they're global supply chains now, we've made them extremely efficient, but they're also very brittle. And this isn't a supply chain webinar, but what happens when they get brittle and they have a shock like this, we're gonna have, getting back into flow, we're gonna have these supply chain problems where there's a glut of product. There's spots now where there's too many masks. People, what do I do with it? It's turning into dead inventory. And there's things that we can't get product. And these swings are gonna go on for probably 18 months. So why am I telling you this? I wanna introduce a word that's critical, and that word is resilience. You need to start thinking about resilience in every process that you have. And if you look, this is called the operational frontier. And if you're going to build something that's resilient, which says I've got all kinds of redundancies, I've got a lot of interconnections, so if one breaks, the process still works. In other words, an airplane won't crash unless there's 3 things that go wrong. That's how much they've done to make it a resilient platform. We've gone very efficient. So if you can't produce and you can't ship, you're not going to be able to invoice and get paid. You need to plan for the next 24 months. We're going to have outbreaks. We're going to have flash spots. You're going to have forced quarantining and the rest of it. And I've listed a number of things. This is just on the production side, but start thinking about how do I make my processes more resilient? You want to be on the optimum. We've typically gone way over on the efficiency, and everybody tried to lower costs. It worked really well, but now all of a sudden you can't get product. I have customers who want to buy things from me. I can't get my raw materials. Everybody's got a story. I don't want a story. I just want a delivery. So, I mean, these are the kinds of things that slow people down. So I've talked a bit about salespeople. I've talked a bit about product development and production. I want to talk about scenarios for just a second. One of the things that happens to people is a series of shocks. This is part of why we're getting pandemic fatigue. There's always, every week there's new surprises, and it takes the eye off the ball. You want to have a forward program that you can build on and have some consistency. And every time these shocks come through, everybody has to stop and talk. Now, this works very well in the Zoom meeting. Everybody can be working at home because you can use the chat box, but you get a facilitator, which would be a board member, if you have one, a consultant that you're working with, a college professor, and you do a brainstorming session with all your people. Imagine you're all on Zoom and you're using the chat box, and you guys just make a list of 100 things that could happen in the next 12 months. They could be good news and bad news. You can have a competitor go broke. You can have, I've listed a bunch of things in green there. And what you're basically doing is you're just making a list and coming up with everything. Get the list first. When the list is complete, and again, you can do this on Zoom, what you do is you take the ones that you think are really important and you build a 1-page scenario. And the scenario says, suppose X happens. And then what you do is you list, somebody owns it, and all you have to do in your brainstorming session is when you come up with these things, somebody takes it offline, they group them, you have another meeting, decide who's going to own each of these situations. So now we have the situation, we have an owner, the owner puts together a 1-pager on the scenario, and then you share it with another Zoom meeting. But here's the point. When these surprises continue to occur, instead of having to stop and lose any forward momentum, everybody knows, well, gee, Johannes is in charge of that. That's his job. He'll take care of it, or he'll update us. And so the whole point is, how do you keep yourself from getting distracted? And even if you get distracted, how quickly can you get back on point in terms of your plan, in terms of where you want to go? So this scenario thing is basically allowing you to set your plan and stay on it without getting distracted. So here's some larger things to think about. And there's a famous line that says, never let a good crisis go to waste. And probably one of the most common lines I've heard from manufacturers. This totally disrupted my sales organization. Everybody had to be at home. We can't make sales calls. Fortunately for me, my salespeople were very creative, but there's no way in the world I want to go back when this crisis is over. I want to go back to the same way of selling. I want to make some changes right now in how I go to market. And most people are increasing resources in marketing, but I want to make those changes now. And so people are starting to say, what do I have to do? So grab a hold. This is really maybe hard to grab, but all euros of revenue are not created equally. Some are strategically much more important than others. If you have a distributor that has been buying from you, you're one of their key suppliers, you're in flow with them, they have customers that keep buying, they're going to keep buying from you. A euro from them is certainly, it's a euro, it's worthwhile, but that's very predictable. You don't have to invest. What you're looking for, the highest value euro that you can get a hold of in the next 12 months is the first euro of a transaction with either a new trading partner or a new customer, because you've created a long tail revenue stream that you're going to enjoy the benefit forever. So do you want to be wide focused in terms of looking at these opportunities, or narrow? There's different answers. Most of you would do much better to pick one or two things, put all of your weight in and focus, because we all have limited resources, put as much weight in these one or two initiatives. And I listed some things on the right that might make sense. And this is a perfect opportunity if you were considering, I want to develop an online channel separate and apart from distribution. What better time could you possibly come up with to do it? The whole point is that disruption creates opportunity. And are you focusing on opportunities, or are you focusing on threats and fear? And the issue is that if you want to grow, you really want to focus on alternatives. And so as we go through and we take a look at this, this to me is one of the things I get very excited about, because I think these are all really big plays. And you can actually hurt yourself. You can spend too much money on this. You can spend not enough, but it needs to be intentional instead of reacting. One of the things, and I mentioned it at the beginning, this digital transition has happened very, very fast. And there are major digital opportunities that exist that people have picked up. And by the way, when I say digital, I'm not talking about an e-commerce site where you're selling things in the web. That is actually a very small piece of the process. But the digital opportunities exist in talent management. How do you create an employee journey in terms of onboarding and taking them all the way through retirement? How do you deal with changes? There's digital and analytics to get the facts for informed decision making. How do you use big data? We teach a number of courses like that at a local university here and at Purdue. And the idea is that if I have better data, I can make better decisions about allocating my resources to the opportunities in the marketplace. We're all very aware of the huge changes that are happening in sales right now. And what happened in the States, and it's happened faster in the States than I've seen in Europe. I don't have solid data on what's happening, and especially in Southern Europe, but I'll tell you one story of the States. In 2015, we had 4.4 million B2B field salespeople, business to business. In 2015, there were 4.4. At the end of 2019, there were 3.4 million. We lost 1 million field salespeople in the United States from 2015 to 2019, and they were replaced with inside sales. They were replaced with e-commerce, punch out sales. This has happened very fast in the States. It's already happening in Europe. I can't tell you I don't have the data yet and didn't have the time for the seminar to figure it out, but there are opportunities here to say, do I have my sales force involved in market making, or are they involved in market serving? Market serving is they're serving existing customers and managing transactions and the rest of it. It's your most expensive resource. They're typically using technology. You can create a much more reliable and higher performance level of a customer experience. Last but not least is marketing. Marketing is making huge inroads because of data and having the data, and it's not spray and pray in terms of all this promotion and everything else. It's being able to get the data and rifle shot opportunities. So, and here's the second thing. So step one, think about digital and what you can do. Step two, if you're a manufacturer, you need to spend some time. This is not a big program. It's probably just senior executives making phone calls, because we don't have trade events to go to. But every potential acquisition needs to know that you're interested. In other words, you're even going to be calling competitors just to compare notes and say, by the way, you know, we've got a really strong balance sheet and we're looking to grow and looking at the long-term opportunities. And if you think doing a strategic alternative analysis and being something more important, just so you know, we'd be interested in having that conversation. That's all. You're just trying to get it registered in everybody's mind. And by the way, there's going to be, not so much right now, we're going to have people are going to have to get used to what we're living with now a little bit more, but starting to see in I would say the first quarter of 2021 and for the next 18 to 24 months, there are a lot of companies that are going to be acquired. And you don't want to find out that you could have bought something and it went somewhere else because they didn't know. So this is low profile, but two things need to happen if you're going to make an acquisition. Number one, the target company has to have something happen to them, some critical event that they say, it's time to go look. That's not going to get that solved for you. Once they make the decision, it's time to go look, they also must think of you. Those two events go forward. So you need to actually lock that down. This third thing is, and it's maybe a bigger bet, but we know the world's going to be different. The world was different after the Great Recession. The world was very different after the 9/11 attacks in the United States. What happens, we go through these discontinuities, we have the change and things are going forward. The new normal, cleaning is going to be very important. People, we're still social beings, we're analog beings in a digital world, but everybody's got to find the new normal for how do we sell, how do we grow, how do we gain share, and we have all this contact issue, excuse me, and the fear everybody's dealing with. There are going to be some companies that decide in terms of finding the innovative ways to market and sell, we're going to be the leader. We're going to figure it out first so that the end users, the distributors, our competitors, everybody's talking about what we're doing. So in 2024, all of you will have copied those firms that were the leaders. So here's the choice. And it's an economic choice. It's not something, let's get all excited, right? It's not a sales guy. I would have this conversation with the CFO first because it is all about the money. But I would say, if I want to invest and be that leader in defining the new norm, both in terms of the product offering, my terms and conditions, how I sell, if I want to be that innovative leader, it's going to cost me money. What is it going to cost? How would I do that? Then that's the investment side. Then I start to say, what's the return? What is the value to us in terms of share and being able to attract the right trading partners and the rest if we're looked at as that leader? And all I'm saying, you can either decide a handful of people will be the leaders. Most of you will be fast followers. You'll see something. And if you go back to the beginning of this deck, what I'm basically saying is that we don't have best practices yet. And there's everything that you do is going to be innovative because it's just sheer chaos right now. But what happens once these leaders move out, there will be best practices and other people will copy them. My view is that you should make that decision for your firm intentionally. Make an intentional decision. I want to be that leader or I want to be a fast follower. Both are absolutely legitimate, but there's going to be some advantage, perhaps. So in terms of these three choices, in terms of accelerating digital, in terms of looking at your ability to acquire firms, and in terms of looking at being the innovator in terms of this new normal, those are three very significant opportunities. And if you kind of go through, if you notice at the bottom of these charts, there's been a lot of links. And what I would suggest, and I'm not saying a CEO does this, but maybe you divide the links up to other people. There's probably 2 full days of research because this is undoing the Gordian knot. How do you figure out where do I get the facts for decision making? And I mean, I found, this is an American taking a shot at American media. If you've been listening to American media, all you are is confused and emotional and afraid. Most of the insights that have been coming out have been coming from the Economist and the Financial Times, and there's links in here that if you chase them down, you can find out the larger scale drivers that are moving this, and it'll give you the insight so you can make some intelligent choices. What we've basically done here, this last slide, is there's 10 links here. there's probably another 10 that were back in the deck. And what it really does is it gives you opportunities to pull out critical thinking. Critical thinking is important here. And it's not about reacting. We're going to react to what we see our competitors and our customers and our distributors asking for. This is really about you putting together a plan. So here's the idea, and then we'll stop and we'll see what kind of questions that we get. But you're going to go through a leaning process and start to figure out as a team, what can we stop doing? Because I've got to create some extra room to do some new things. So you go through that discussion, and it's all about, are your resources aligned to the opportunities for growth that you have today? So you go through a lean out. You're going to go through some research. This is like an S1 in a military unit. This is your intelligence officer. You're going to use these links and whatever else you got and build up a fact base that you can use and frame to use those facts to make the right decisions. You're going to put together a go forward plan at that point that will involve a lot of the ideas that I just talked about, and then you're going to launch it with your team. And in terms of launching it with your team, they need to come away with the confidence that, you know what, this is crazy these times, but we can win. This is something I'm excited about. And so as you start to put that together, that's a sequence of event, and remember, speed is a weapon. All of that should be done, and that plan should be announced and rolled out in August. You're only a couple days, August 1st is on Friday. And doing all those meetings and doing all that research, you can have a complete reset by the end of August and then carry it through. And remember, I talked about setting up a crisis team in terms of including rapid responses. The idea is that we get started, as things change, we're able to use speed as a weapon and exploit these opportunities. So before I open it up for questions, I mentioned earlier that there's a place that you had to be bold, and I wanted to talk a little bit about that. Daniel Burnham, this quote on the left, is a famous American architect, and I know Europe, well, never mind, it's a different discussion, but he's the man that designed our city of Chicago. And this quote is very important, and it featured prominently in the US culture. And it was, make no little plans because they have no magic to stir men's blood and probably themselves will not be realized. If you just have the normal kind of plan, we're just going to try harder. The most incompetent senior sales executive would be somebody that goes out to their sales team and says, everything's the same, you just have to run harder and do everything more, better, faster. That's not leadership. That's just inflicting a beating on people that are already overworked. You put together a bold plan and somebody says, you know what? This is going to allow us to break out and get ahead of the pack. I'm working for a winner. I'm working for somebody that believes in sustainability. I trust and I value the values in this company. They get excited. So if you make a big plan and you're high, there's one thing to remember about a business, and that's that participation creates commitment. If people are involved creating this plan, it's going to be their plan instead of just running back to the boss and say it doesn't work. So I'm not saying get crazy, but find something to be bold with that gets people excited. The other thing I'll do before I kick it back to Manuela for questions is that this Chinese symbol I saw several years ago, and it had a big impact on me. And pinyin is, it will get a smile out of your Chinese associates if you use the term, because it's really two symbols. When they say crisis, it's two words that they put together. It's danger and it's opportunity. And when you put those two symbols together, that's a Chinese symbol for crisis. We have a crisis. Peter Drucker said that, and he was father of modern management. He died back in 2005. He said that managers that don't take risks typically make 2 mistakes a year. Managers that do take risks typically make about 2 mistakes a year. The issue here is that you cannot avoid risk. So take the risks you understand. Don't take the risks you don't. And focus on the opportunities. So I've kind of gone through all of that. Manuela, I'm going to have a drink of my soda now because I'm tired, but let's see if there are any questions in terms of what came out of the group.
Well, first of all, let me thank you, Mike, because this was great, very inspirational. I think we all took a lot of notes. Thank you for that. I would like to propose, because we have a small group, a few of us had to leave at 3. So I want to open up the line, the microphone, because I think we can manage, and see if there are any comments or questions coming directly from the participants.
That's a great idea.
Let's see how it goes. So attendees, they are gonna have, you guys will be able to unmute yourself now if you want to ask questions. Otherwise, feel to raise your hand through the panel, and I can call your names if you want to comment or ask a question. So you will see your microphone is still red, but if you click on it, you will make it green and you can ask a question. Any comments, questions?
We have to have a moment of silence because everybody waits for somebody else to go first, Manuela.
Yes, I will call then someone. I will call, let's see, Michael De Figlia. Michael, you are also consultant and helping manufacturers in Germany. Do you want to share what you are experiencing now at the moment, what your clients are experiencing? Let's see. Somehow it says that microphones are still, let me check, 1 second.
Manu, may I ask a question?
Yes,
certainly.
no.
Hi, Mike. My name is Daniel. I am a representative of ISSA. I'm a colleague of Manuela, and I work from Germany. And my question has to do with the market here. My feeling is that when I speak to our associates, that especially in Central Europe or in continental Europe, most of them are sitting over their assets and they're being very conservative. They are like waiting for this wave to go by, and moreover, some people are downsizing quite extremely. So my question is, doesn't that actually have the opposite effect? So won't they be less prepared for when the recovery starts?
That you are correct, but in terms of the actions that people took, we're at an inflection point right now, Daniel, because I think when this hit all of us, we had to do layoffs, we had quarantining issues, we had plants closing, we had all kinds of horrible problems because we all got hit. Now, what's happened is that this has been going on for a long time, and it's time to get back up again and go do something. There are a lot of people that are just very, very slow to get up. Now, I'll tell you one very specific story. This is, and I can't tell you who, but they did a payroll reduction, right? A short-term payroll reduction. They did all the things to reduce their costs to affect the delayed revenue. They also did some downsizing, and everybody went into what in the States we would call hunker down, like you were describing in Central Europe. People were being very conservative, trying to watch cash, doing everything else because we had no idea if this was the beginning and it was going to get worse. And that was absolutely the right decision to make. If I'd been on the board of one of those companies, that's exactly what I would have wanted them to do. Here's the interesting choice right now, Daniel, and that's that, do I decide, we all got knocked down, my competitors got knocked down too. Is it time for me to stand up and go do something, or should I stay laying on the ground with everybody else and then we'll all get up at the same time and go back into the competitive fight? Is a personal decision, and that comes back to when Manuela and I were talking at the beginning. Every company needs to decide if they're playing the game to win or playing it not to lose. One of the things, if you go back and look at the history from 2009 and 2010, when the Great Recession, and there were, I mean, that was actually a bigger financial shock than we've had now, because we didn't have near the stimulus that's going on now. And I mean, there's another issue about money and government debt and GDP ratios, but what happened back then, those companies that moved very quickly and moved aggressively, if you look at what happened to market position in 2011 and 12, those people that moved quickly and aggressively ended up gaining a fair amount of share over their competitors. Because here's the problem. When you look at an economic cycle, I have high growth rate and an expanding economy, but so does everybody else. It's very hard to get share. In a recession, when we're down at the bottom of the trough, everybody's in a turtle mode of hunkering down. It's very hard to grow any share then. When you talk about growing share competitively, and again, this is about, if you look at the market, what share of the pie is mine? What I care about are the shoulders of those economic cycles. I can gain significant share going into a recession, and I can gain significant share coming out of a recession. And a big part of both of those strategies says I have to react early. So when you have a lack of leadership and people don't know what to do and they're uncertain, they know it's better not to do anything because it might be wrong, and they tend to get paralyzed. The one thing I feel very confident about is that, and again, like most webinars, a lot of people, I got a good idea, that was nice, and they don't do anything. If there's 2 or 3 man days spent researching what's in these links that are in here, I genuinely believe that when we've done this with clients we've worked with personally, when they have that data, they decide it's time to get off the ground and start fighting. So it's a personal choice. And just remember, it's if you're following the majority of what people are doing, you're probably wrong. Because it's usually the people on the outside, either way, and I don't know, we spend a lot of our time assessing risk, and this gets to be a real issue, and so people have to make a personal decision. And if you're trying to avoid risk because of uncertainty, you're playing the game not to lose. And frankly, assume this continues and we're struggling with this, very similar to what happened to Spanish flu, that this is a part of our lives for the next several years. Those people that are hunkered down and stay hunkered down, they're going to stay hunkered down for a couple of years. You can only do that so long because companies rot from the inside out. And the guys that are moving and growing are going to attract all the top talent. And that's how the market, that's what happened in the Great Recession. That's what happened after World War II. It's just the nature of the economy. It's Adam Smith's invisible hand. So I don't mean to sound flippant on that, Daniel, but the majority of people that are hunkered down are going to find out when they look back on it, they're going to say, I wish I would have. So
thank you.
Does that make sense, Daniel?
Yeah. Thanks for that. That was the feeling. Yes. Thank you very much.
And by the way, as an ISSA person, it's very hard when as a member of ISSA, you guys get a perspective because you get to see so many things a lot closer than an individual company does. It's very hard for you to make people successful in spite of themselves. All you can do is put the information in front and try to make it as easy for people to understand. But every member of ISSA is going to make their own business decisions, and your membership will change.
Yes, thank you, Mike. This is this is so true, and this is what we will keep doing it for our members and for the members to be. So if we take your suggestion, we will keep investing in the knowledge and expertise for members and non-members who might become members in the future, and trying to position ourselves as the leading association for the cleaning industry. I think that there are not any further comments, but as you asked me to at the beginning of when we were discussing this webinar, any questions that you might have that you wanted to pose offline, this is to the participants, feel free to send me an email, and Mike and I will discuss those questions. Actually, we'll record the conversation and share with you. So feel free to send any comments or topics you would like to see developed further. What I also want to I want to just to share.
Manuela, can I throw one small adjustment in there? And that's it. And I've run into this when I speak with groups of manufacturers in a webinar. A lot of the people on this call are competitors with each other, which tends to make them reluctant to ask questions because I don't want my competitor to know I have the question. So what we're going to do, if you have a question, and this is kind of a standard procedure. Manuela and I will go ahead and you send your questions in. Make sure that they do not identify your company in the text of the question. Make sure it's a general enough deal, because what we'll do is we'll put all those questions up. Manuela and I will go through, we'll come up with answers to that, and she'll send the link out. So you don't want to identify yourself, but given the competitive nature of our audience, this is a relatively common thing, and we'll get that recorded. It's very easy for us to do, and she can send you the link. Sorry, I didn't mean to interrupt you.
No, not at all. I just wanted to close with a couple of your quotes that I'm going to bring with me for the months to come. Well, speed is a weapon. I think that this is very important for all of us. Another very important message from you, Mike, is really create resources aligned to the opportunities we have today. And this is really cross-border. Doesn't matter if you're manufacturers, cleaning contractors, distributors, or association. I think this is very important for all of us, as well as your quotes on like make intentional decision in your business. I think this is also very important. And these are my takeaways from today.
That's a great summary. I mean, if we got that done, it's a win. And there's a relief. And I guess this is probably a good place for me to kind of close it. I know this has been a horrible thing for everybody, and it's still changing, and nobody likes it, and it's gonna be with us for a while. But there is a certain freedom or comfort that you get when you actually are gathering information from multiple sources. A lot of what you're going to find if people go through those links, what's happened in Asia, they're already past this. They're on to doing different things now. I mean, really different structures, but there's a lot that you can learn from people that have been through it before. Just anything you're faced with, assume that it happened in Asia 6 months ago. And I'm not saying you can copy it, but I have a certain level of comfort because I don't know what's going to happen specifically next, but I know history doesn't repeat itself, but it rhymes, and I can see the same pattern playing out, and it makes it a lot easier to understand and to make decisions. And so I think getting that flow of information, it's very lonely to be an executive, and as a consultant, you feel tremendous responsibility when you're giving people advice that they're going to act on. And so it's a very sobering kind of activity. But if you get that flow of information, it's going to make everything a lot easier. So I appreciate everybody taking the time. I appreciate people staying, and I'll look forward to our next conversation, Manuela.
Thank you very much, Mike. Have a nice afternoon, and thank you everyone to all of you who attended. Bye. Cheers.
Bye-bye.
Bye-bye.